The stock market bubble continues to grow, but will it pop? That's what we're going to discuss today. Look at AI, look at Nvidia's stock. ChatGPT has taken the world by storm, but is this really a sign of things to come? Are we getting ahead of ourselves? I want to discuss all of that right here and now. Welcome, truth seekers. You've landed in the right place. I want to bring you what others simply can't. So join this grassroots movement of nearly 300,000 other people. Hit that subscribe and the notification beside it so that we can conquer this together. Speaking of which, what we need to conquer is this understanding of what's going on in the markets here today for our portfolios, for our retirement accounts, and so on, and just to generally understand the psychology of money. Right here, I want to look at AI and give a little insight as to what's happening. Powell hasn't said enough to douse AI mania and pointing to Nvidia's stock. The stock went up 200% in a very short period of time. That's not normal, especially for a very big company. They were already big companies. Tech is back as sort of a safe haven, the safe place to go. It's back to what is the safe haven for equity investors? The safe haven is large cap tech. If you remember, I did a video years ago that said, it was like the image is just like my hand like this, and it says, sell all of your stocks and buy these four. Now, if you watch that video, essentially what I said was, you only need to invest in the FANG stocks. You remember FANG stocks? That was very popular for a while. But what I said in that video was the tech stocks, the big tech stocks, those are the ones that are seeing all the attention and probably will for a while. The names, the FANG names, those change, right? The Netflix didn't do as well after. Facebook took a nosedive, and then as soon as they started mentioning artificial intelligence, the stock went up like crazy. Those are important, okay? But what I'm trying to suggest to everybody is you got to follow the money. And we could see that through the EPFR data. EPFR, which I'll show you in a second here, gets into like where the actual money is flowing. At the same time, we can look at retail investors. You know where the retail investors are putting their money. That is tech stocks, always tech stocks. There's nothing else. Okay, so we know that retail is going to be throwing their money there. At the same time, we've got the central banks. Look at the Swiss National Bank. We know that they've been buying hand over fist into tech stocks for many years. You can look at hedge funds. You can look at the investment companies, as well as passive income ETFs. A lot of concentration is taking place in these very big tech stocks. That is absolutely noted right here and now. That doesn't mean that the resource-based stocks or staples and all these different things are not important, but we got to see where that cash is flowing. Okay, and that is very apparent right here and now going into these big tech stocks. Okay, I just want to make that clear. You do what you want with that information. I think for a lot of people, they're going to double down on it. That's really what I see happening. They're going to double down on AI. They're going to double down on tech stocks, and they're going to go head first because the narrative is that this is the future. So that's where the money's going. New shiny bull market could be a mirage, and Wall Street should brace for a big collapse after recent rally, warns Bank of America analyst. Bank of America analyst Michael Hartnett, who I've brought to you before, believes that this is not going to last. Now, he's not saying the S&P 500 is going to come down to 2,000 or 2,500. I believe that he's generally said somewhere around anywhere between 3,000, 3,400. That would be a very big drop from this point here because it is getting ever closer to its record high that it had previously. All right. Basically just saying it's getting way too ahead of itself. It's gone up way too fast. That doesn't mean that he's correct at all. But you see the S&P 500 defying gravity, 4,400, amidst the thought that, oh, this is a recession happening now. Okay. You could look at it for yourself. Basically, that's what he mentions. I won't, beat a dead horse on it. Investors pour into equities to chase the bull. That's part of the same information. You could look at it, EPFR data. Investors put $22 billion into stocks and took $38 billion from cash, the first outflow in 8 weeks. We say big rally before big collapse, but the latter now needs 6% terminal Fed funds, real rates to 2%, unemployment rate of greater than 4%. So we don't know what's going to happen, but I think it's just interesting to see it, to look at where the money's flowing. You could look at it in this example that I showed you earlier, like what the hedge funds are doing, the concentration, the SNB, the Swiss National Bank, look at the retail investors, all that. But then we actually see it in the data coming from the EPFR. Okay? I don't like predictions. If you watch this channel, you know that I do not like predictions, but I have been very accurate in what I've been saying. Follow the money, that's number one. Number two is to basically look at what they're telling you. I mean, they say it outright. Where the money's going, are we going to be tight? Are we going to be loose? And when you look at it on a whole level, on a whole, this really top-down view or zoom out, it starts to make a lot of sense. That's why back in October, I was saying, or actually September, I was saying in October, it looks like it could be at the very least a near-term bottom. And the market has been just going up straight from this point. Okay, so keep that in mind. Defiant stock bulls are acting like the earnings recession is a hoax. Big tech's long-term profit trend seen intact after 2022 slump. NASDAQ runs toward prior peak versus the S&P 500 amid relentless rally. We don't know what's going to happen, but I think it's pretty clear nobody at this point wants to be bearish. They really don't, right? Because they've been getting punished if they've been shorting in the last little while since October. Money flowed in and poor countries paid the price. This is talking about what's happened with bailouts and everything. And the reason I mention this, it is that the Federal Reserve, the actions that they take hurt a lot of other countries. And it's not as if that should change anything. I just want to make it clear that when the US makes a move, the whole world is impacted. Financial globalization was supposed to usher in an era of robust growth and fiscal stability in the developing world. It ended up doing just the opposite. And this is crazy, but that's the way the world works. Now, I wanted to cover one other aspect here. Global rate hike endgame is now haunted by recession worries. Central bankers' zeal on inflation is provoking growth concern. Policy mistakes may transpire. And I just think that, they've been talking about this a while. You got to get serious with the situation and realize they act sometimes like they don't know what's going to happen. Well, we're going to play it by ear, all this stuff. They know exactly what's going on, okay? We've been talking about this a long time, looking at each and every piece of this puzzle. The bond market is screaming recession. Earnings are not looking good. The profit margins that these companies have been making, though, in some cases have been very, very well. And that's part of the reason why these stocks are doing well. You just fire a whole bunch of people, you raise your prices, and it's all good, at least for them. Home prices by country. I just want to show you this as well. This is directly impacted by what we see with all of these different assets, depending on where you look, are performing extremely well. Home prices by country, this is just a breakdown, and you could see it in real terms, but nominal terms. Looking at the US, for instance, nominal housing prices, 7.1%, but what about in real terms? Oh, by the way, 0%. That's right, because when you factor in inflation, your assets did not perform the way that you think they did, that you tell all your friends about. That's what's going on, of course. Yeah, your stocks went up by this percent. Oh, don't include that whole time that it was going down. Let's not include that. But the point here is that when you factor in inflation, things don't look as pretty. And so if inflation persists for a long time, that's just eating away from your returns. You got to be aware of that as well. Looking at this, I think you should be aware of, how to invest the best way. And that is when you look around the world and things are happening, actions are being taken, politics, war, natural disaster, whatever it is. You got to know the ins and outs. And I describe that right here in this video. Click it and I'll see you there.